Welcome to the Unmuted Podcast. My name is Jeff Waldman, founder of the podcast and also founder of Scale HR, where we do all things skills development, working with HR practitioners, leaders, and also business leaders as well to upskill them. So this podcast is all about HR tech, talent, world of work, benefit, you name it, we talk about it all. And we have a lot of, different guests on our show, and we drop new episodes every week on Thursday morning. The episodes live on our website, GoScaleHR.com, and also on our YouTube channel. So please add your comments, subscribe. Yeah, I know it sounds cheesy, but you know what? Hit that bell button, baby, and so you can be notified of later podcast episodes being dropped. So this episode here is a really important topic. It's called insurance transformation, catch up, or collaboration. So it's a bit of it's not as straightforward as you might think, but you know what? I'm going to just add a couple of key points here on this episode topic, and then we will bring in our guest, Chris Gory, who was very well known in the, Canadian insurance tech health. You know what? I'll let him tell you all about him in about 2 minutes. Okay. So obviously, health insurance is a really interesting space in Canada, and for those of you chiming in from the U.S., obviously it's a very different ballgame here in Canada than it is in the U.S. And I guess when you talk about disruption, it's probably not overly synonymous with the health insurance industry. It's not overly innovative, fast moving, and it almost seems like it's in a perpetual state of playing catch up and to the needs of Canadian workers, employees, and so on. And for me, my career started about 25 years ago, and I've had the same point of view for all of my career, is that it just always seems like they are playing catch up. And so during the past couple of years, obviously a lot of what we're talking about these days is about the massive change in the last 4 years since the pandemic started, is a massive spike in demand for really specific things like medical marijuana, fertility treatments, mental health supports, and so on. And so the question then becomes, do all of our carriers in Canada or elsewhere, do they provide coverage for the new types of demand? But then I always goes back to the original question: is are carriers playing catch up? The idea of disruption is usually synonymous with technology, right? Entrepreneurs are trying to solve a problem, and they build a software solution to do that. They often scale, offer a level of value that most service-based solutions can. And so I guess the next question is, are insurtech companies entering the space aiming to disrupt and create solutions that solve problems, or are they simply just trying to partner with the legacy carriers like the Canada Lights and the Great-West Life of the world to obtain a small piece of the pie? So is there really anything really going on that's new and innovative? I don't know. The answer could be yes, it could be no, it could be both, it could be something else. And so that's where I want to break it all down with my guest, Chris Gory. And Chris, very well known in the space, so I just want to welcome you to the Unmuted podcast.
Thanks for having me, Jeff. I appreciate it.
So, Chris, I just said a whole lot there. It sounded like a big word salad. So I want, before we get into it, can you just tell us a bit about what you do?
The simplified version: employee benefits for startups, and I'm a nerd. I got into insurtech actually almost 30 years ago, back in 1995, and but specifically employee benefits, health insurance back in 06, and started working with primarily startups in 08, and I've been doing that, just focusing on startups, various sizes, for 16 years now.
And your company is called Orchard Benefits.
Right? That's right. Yeah, Orchard Benefits. little history behind the name. It's
Okay.
when I had to rebrand a couple of years ago, I came up with that name, A, because I like working with companies as they grow, like an orchard. And it also pays like a tribute to a part of Toronto where I grew up, which actually was an orchard until the 1930s for the rich people nearby. So there's
Oh,
personal history there.
interesting.
Yeah.
Okay, so I didn't know that, so I'm glad I asked the question. But you know what? I'm gonna dive right into the very first question that I think what's coming here is why do legacy carriers lag in evolving their coverages for new or niche area? Now, don't forget, we only have a certain amount of time, so not 10 hours or 2 hours. So, what is the absolute cold notes version of your answer?
They're starting to catch up. So, quick thing. Benefits in Canada, $58 billion industry. Three tiers of carriers. The big three, Canada Life, Sun Life, and Manulife, they have each between 10 and 12 billion. The tier two carriers have between 1 and 4 billion, and the tier three carriers are all below 1 billion. And there was
Okay.
just complacency with the big three. And you see a lot of the tier two and tier three carriers gaining market share. In the last 2 years, the market share for the big three has dropped from 64.11% to 63%. So the other ones, the smaller two, the tier twos and tier threes, they're gaining 25%, some 10, 12 year after year. They're eating away at the market share for the big three.
So, do you know why though? Like, what is really causing that shift?
They're getting a lot more creative
Okay.
in the coverage they're including. Like you look at the tier twos, like a Green Shield, a Desjardins, a Medivie Blue Cross, which is Blue Cross Ontario through the Maritimes. They're offering stuff, paramedical practitioners, fertility coverage. The big three
Yeah.
either don't or they're just scrambling to add now.
Okay. So that's really interesting. Okay. Um, so I made the point earlier that may be viewed as a bit controversial, that insurtechs are simply partnering with insurance advisors, which is basically just trying to get in and just grab market share versus actually changing the space for the better. Is that a fair point to make?
Yeah, absolutely. Back in 2015, 2017, there was the whole Zenefits buzz in the States with the 600 million they raised. And we had a couple of companies in Canada looking to do the exact same thing. Well, fast forward 6, 8 years, there's only one of them left. And I know about these companies. I was asked to be a co-founder of two of the four, where they come up with proprietary HR and give that out in exchange for becoming your advisor. Only one has withstood that full 8-year window. If Zenefits couldn't make a go of it with 600 million, I'm not sure why the others thought they could.
And you're not willing to, drop the name, are you?
I was asked to be a co-founder of Humi and Collage.
Okay. Very interesting. All right, cool.
Yeah,
Thank you for your transparency there.
of course.
So when we were planning this episode, you mentioned something about the emergence of specialty platforms, or I guess niche platforms, maybe focusing on sort of one small thing or niche area. For example, fertility, virtual care for kids, women dealing with menopause, and so on and so on. What are your thoughts on these platforms, and how well will they do providing a valuable offering to the Canadian workforce?
It's interesting. Tell everyone just to kind of do your due diligence looking at these platforms, because they're getting some of them are getting very specialized. Fertility, menopause, virtual care for kids. But there's also I don't want to say a lack of stability. Some of them were focused before on SMB, and now they've pivoted and they say we're only working with enterprise companies. There was one company that was in the pet insurance space, and they originally said, "Yeah, we'll work with companies with 20 employees. Now it's 1,000 or more." And now I'm seeing, and Jeff, you and I have talked about this podcast for a little while, for a couple of weeks now, and I mean, as recently as yesterday, they're one of the large virtual care platforms in Canada it looks like they're going to go belly up into receivership because they actually filed paperwork saying they can't get their Q4 and 2023 financials done in time, and now their stocks have stopped trading. So that company's CloudMD. So I just tell everyone, just do your due diligence, speak to others in the HR space, and see what success they've had, and survey your team. I mean, a fertility platform is not going to work for a company with the average age of 45 or 50. Likewise, a menopause platform is not going to work for a team with 28 or 30 average age. Right. So really survey your team members.
Yeah, and that's a good point because, part of the other problem too, I think, is that when you start having different platforms, right, you start running into, the issue of, using too many tools, different platforms to do, different things. And that, becomes a cycle where, obviously, integrations helps and, running like a platform like Zapier and so on. But that becomes really difficult to manage. Plus the sheer cost of just having specific niche platforms for many different things. I think, that's going to be sort of a primary issue as well. And I mean, I'm always intrigued by these new platforms, that are popping up, but I can't. It's really difficult to get really excited about them from a long-term point of view. But I don't know. I mean, it's really difficult.
I see some of the insurance companies that are doing some exciting things, like Sun Life. They realized, taking a conversation back to fertility, they realized the importance of it. So, a couple of years ago, they made a strategic investment in Dialogue, which is virtual care. Then they ended up purchasing them a year or so ago. Now, recently, Dialogue purchased Bria, which is for fertility coverage, and they're embedding that within the Dialogue platform. So they are completely embracing that and realizing that's important. I mean, you look at Canada Life; they've now actually included unlimited fertility drugs. Where I think it's going to go next is into the treatment side. A lot of the times you see one carrier do something and the others play catch up. And Desjardins done that. They added on fertility drugs and treatment. So now you're seeing other carriers adding on fertility drugs. And I think the day is going to come where you're going to see fertility treatment plans as well. But it's just always one leading the way and the others playing catch up. What happened with the marijuana and now this?
Yeah, that's a whole other issue with medical marijuana in mind. Yet a U.S. counterpart's always asking about the Canadian landscape when it comes to marijuana, and I say, well, which corner of the street, do you want to purchase your marijuana from? Because there's dispensaries everywhere here, obviously. But so just talking about the future, what trend do you see emerging?
Consolidation. Well, consolidation is one for sure. We have too many platforms. You look at virtual care. So there's the Dialogues, the Maples. Anyone who knows me, I'm a numbers nerd. I love throwing stuff on spreadsheets. And I was tracking virtual care platforms. At the height of COVID, we had 42 different virtual care platforms in Canada.
In Canada alone, which is obviously way too many.
And now we're in single digits. So I think we're going to see that on virtual care. We're going to see that in the EAP space. We're going to see that in the digital pharmacy space. I think there are just too many players to support it. And it's a race to the bottom. You see all these people cutting their costs to get market share. It's not sustainable. So I think we'll see consolidation for sure. And then we'll see some other things like, for more on the fertility side, more on elder care, more on menopause, more on I also have noticed more executive health platforms popping up in Canada. Yeah, I don't want to use the term private healthcare, but executive. We've seen, I think, there are 5 or 6 players now in Canada in that space.
I mean, what you talked about with the consolidation, that's a normal part of any industry, actually, when it comes to technology, with too many players. And so either they try to sell off, or they try to merge, or they just shut down, all together, because it, obviously can't meet their, whether it's, paying payroll and their runaway, can't handle it, or, they can't get more funding and so on. So, you know, I think that's pretty interesting. I mean, but are there, any, I guess, why I always call it cool tools, but you know, in this case, really cool platforms that are emerging that you like, and this isn't meant to be like an ad, for your favorite tool, and then you get a whole bunch of business out of it. No, I'm just saying, like, is there like are there a couple tools out there, platforms that you like?
There's one that intrigues me in full transparency. I haven't done any business with them, so I can't
Okay.
say, but I know other people have, and I know some of the insurance companies have partnered with them. And this is, it gets very creative for companies that have a group RSP, just kind of moving away from the health and dental. I'll get back to that in a second. But on the group RSP side, there's a platform out of Calgary called Marmot Benefits. And if they have a group RSP with an employer contribution, it allows the employees to redirect their contribution to the RSP to pay off student loan or mortgage while maintaining the employer contribution.
And it's pre-tax.
Uh, yeah, it's coming off payroll deductions.
Wow. So instead of taking it as a post income tax, which, as all of in this country we get hammered on income taxes, but this episode is not a dig against our government. Okay, so I'm just saying we are a higher tax country, so let's just put it out there. But it's a benefit though if it's a pre-tax,
Yeah.
to pay off your mortgage. No wonder how that works.
And the student loan too. So they did the student loan.
Yeah.
Yeah, they had that one in place for a couple of years, and they've just rolled out the mortgage option Q1 of this year of 2024.
So someone can totally bypass, paying income taxes and just fund it towards a mortgage. Very interesting.
Yeah, it's one of the creative ones. On the health side, um, I'm seeing more. You're going to see more embedded products, I think. I'm curious to see what Dialogue's going to do. Sun's going to do. Now they've got Dialogue and they've embedded Bria Health, and they made a strategic investment in Pillway and how they're going to embed the digital pharmacy into Dialogue and into Bria. So, yeah, to me, the one that I really am excited about is Marmot. I'm curious to see what some of the other ones are. But now you get into all these other platforms. They're so neat. Pix Care with virtual care for kids. And there's a whole slew of them, Jeff. So that's the one that intrigues me the most.
Okay, very interesting. Thank you for that. So, what is one thing that you can sort of impart on people actually watching this episode? Obviously, we talked about various things, but what is that one sort of takeaway that you would want people to have?
I'd say, and this is going to throw a little bit of shade at the industry that I've worked in for so long, don't rely on your insurance company for everything. You've got to get creative in your total compensation package. Don't rely on your Canada Lifes or your Sun Lifes or your Manual Lifes. And also don't be shy to look at other carriers. Yeah, you don't get the name brand, but you're still going to get excellent service with some of these tier 2 and tier 3. And I only call them tier 2 and tier 3 because of the size of the business, not because of the service.
Right. And that's a good point, because I think that a lot of HR people really struggle with this in trying to make sense of all of this, because they look at it from a pure cost point of view, short-term cost, right? But they fail to really sort of take a look at, okay, so how does this plan or this mix of coverage, actually align to their workforce and what they need? And so what some of them fail to do is, sure, this plan might be cheaper year one, but then they are getting hammered, year 2 and 3, because they want to, obviously discount, year one, and then you end up paying for the nose later on. So that's just one example of where, HR practitioners and leaders need to really focus on the data. And I think that's where I'll put in a plug here, for you, is that, having people like you sort of in their, arsenal, and obviously to support them to make the proper, decisions is always beneficial. I've been a huge, proponent of having a a trusted broker who understands, your needs and can actually work with you, and put pressure on the, carriers as well, to make some changes, because I think, working with small businesses, obviously when you have a smaller number of people, it's really difficult to get the types of services and offerings that you really need. So, but it is doable. But then you need people in your corner who know it, who know the system. So, I just want to so thank you for being here, Chris. I know that this is a really interesting topic. I would love to hear your thoughts and feedback from the community. And so once again, the Unmuted Podcast. So we talk about all things HR tech, work tech, health tech, insurtech, this tech, that tech, the world of work. And we drop episodes every Thursday morning on our website, ghostscalehr.com. And don't forget to smash that bell so you can see the next episode. I'm getting better at this, right? And so, Chris, I just want to thank you for being here.
Thanks for having me, Jeff. I really appreciate this.